It is Monday, and that means it's Gold Game Film time with Frank Holmes. Frank, how are you?
Good to be here.
So, Frank, before we get started, last week you were at the Minds and Money Conference in London. How did that go?
It went exceptionally well. I was impressed with the crowd, but what's interesting is there's less and less junior mining companies. They just can't afford to fly there and be there, but all the booths were packed. The crowd was great. Wonderful lineup of speakers. So I thought, that was good, and it was good energy. People walking around, trying to communicate, look for opportunities in the marketplace. And then we had this huge reversal in gold prices.
And real quick, Frank, since you were in Europe during the aftermath of the Swiss gold referendum, what were people saying out there? What was the feeling you were getting?
Well, what shocked a lot of people was the government's anti-marketing program to have people vote no, let the government have a free hand to leverage the balance sheet. I think it's the highest in Europe, where they have so many euros. They've been trying to peg the Swiss franc to the euro at 120. So they have a huge amount of a currency swap. This idea that the government would come out to try to stop people from holding them accountable was fascinating, but they thought that gold was being shorted. It was aggressively shorted going into the vote. When the vote came out that it was negative, then all of a sudden it dropped, but buyers came in, and you had this spectacular short covering, a run of gold running $76. So that was the basic thoughts of what was taking place.
So let's start with strengths and weaknesses, looking at strengths first, and that's coming out of China and physical gold demand, which has had a pretty good year compared to last year and seems to be picking up more steam in December. So, Frank, what are you making out of your 800-pound gorilla in the room?
Well, the big 800-pound gorilla is going to have important economic data coming out this week. It's going to be its PPI and CPI numbers. But I think I've written about this for close to 18 months. The shift, geologists like to talk about tectonic plate shifts, and there is a real shift going on regarding gold, and the physical gold going to China, and I think they have a long-term plan. When you look at China as a country, they have the largest U.S. dollar deposits. They own dollars, and they own them through bonds, a lot of 3-year government bonds. So as the dollar is strong and the gold goes down for them, they're able to buy gold cheaper and cheaper because they're out there with a strategy, it appears, to build a huge critical base to support their currency. So they're doing everything to provide new liquidity, the convertibility of renminbi into the Singaporean dollar, the backing of buying more gold. These are all constructive long-term programs for the Chinese.
And now, touching on weaknesses for gold, we're going to look at last week's jobs reports, which exceeded all expectations. We saw gold dip below $1,200 once the results came out. So having said that, and looked at, the repercussions, if you will, of strong economic data, what else is coming out for the rest of the year that may have some effect, negative effect on gold?
Well, I think the biggest thing is what will it do to the dollar? It's the dollar volatility, which is showing up in the volatility of gold prices. The currency between what's taking place in the Japanese yen versus the euro versus the dollar are significant in accelerating the volatility of gold. The rolling 12-month annual volatility of gold has gone from 13% to 19% because of the volatility of the dollar to the euro. And it's also impacted Canadians. We've seen what the currency of the Canadian dollar, the US dollar, it's off 14% in the past year alone. So this is a sort of trifecta of volatility. Now, retail sales come out this week. Will they be robust? Well, I think deep down when you look under the hood, it'll actually be good for gold consumption. You'll see silver coins remain strong, but you're going to see it show up in jewelry. The jewelry demand should pick up in America.
And that brings us to our OT segment. We're going to start with opportunities, and for that we head back to China. In your SWOT report, you noted that the Chinese government are putting restrictions on imports for gold, and you also noted that in China you're expecting to see, or analysts are expecting to see, a slow in gold output. So, where are the opportunities for gold?
Well, I think that the supply of gold from many mines is going to contract, and we're going to start seeing the decline in 2015 accelerate, just like we're going to see oil production from fracking is going to decelerate. It's going to drop. The supply is going to drop with these lower commodity prices. This will have a significant impact for all these commodities, but in particular we'll see for gold is the gold price will start to rally from that.
And now for threats. It's that time of year again where banks and firms are going to start coming out with their forecasts for the near term as well as 2015. So you looked at SocGen, which put out a report saying that 1,085 gold in the next 3 months was what they were looking at. So it's a bit of a drastic drop from the price ranges we're seeing right now. But what I want to ask is, where are the threats that are going to bring gold drastically down to these levels?
The biggest clearly is the dollar. What is happening with the dollar? That's always going to have a significant short-term impact. And for your listeners, what's the volatility? What is the 12-month volatility? It is a non-event right now. If we look at the past 10 years, for the gold to go plus or minus 18, 19%. So for gold to fall $200 or rise $200 would just be its normal DNA of volatility. So these guys forecasting gold's going to fall $200, it would be its normal DNA volatility. Vice versa, for it to rise $200. The big call is, do they think it's going to go to $800? Or do you think gold's going to be in a year from now $1,400? Because that's a 2 standard deviation call. I don't see many people having that forecast.
And that brings us to our gold touchdown pass of the week. Frank, you're going to play Teddy Bridgewater. It's overtime. You're throwing that touchdown pass. Where is it going?
Well, I think you have to take a look at what the retail sales in America are, because that will impact its currency, the dollar. And I think what takes place in China with its inflationary rates, how subdued will they be? And that will have an impact on just the overall confidence of China.
Excellent. Thank you, Frank. And thank you for joining us for this edition of Gold Game Film. Now, coming up at the end of the week, our Outlook series starts for 2015. Make sure you tune in for that. We have Jim Rickards and Brent Cook kicking it off on Friday. Have a good one.